So in this video, we're going to talk about two specific patterns that you should use for swing trading. What's up, Tim Sykes, millionaire mentor and trader here, giving you tips, giving you lessons that I've learned over the past 20 years. Some people like day trading, some people like swing trading. Leave a comment just below. Let me know which you prefer. I'm curious, there's no one right answer. We're all different, but do you prefer day trading or swing trading? I go, both ways. I just want to make money for me when there's a good opportunity. I will tell you, I personally have patience problems, so I'm leaning more towards the day trading. Swing trading is where you're holding a stock for several days, sometimes even several weeks, because maybe the news takes a little while to play out. Maybe the move is a little slower than a lot of the volatile stocks that I do for day trading. Day trading doesn't necessarily mean that you're holding the stock just for a minute or an hour. Sometimes I still hold the stock overnight, but within 24 hours, I guess it's considered one day. This is not an exact science, okay? When some people say, oh, day trading is this, swing trading is this, I don't know. You need to find your optimal holding time. Some people do like holding for just a few minutes. Some people like a few hours. Some people like a few days, weeks, months, years. It's totally up to you. Try everything. I encourage that, okay? You need to think of yourself as a scientist. But two specific patterns that I have personally used and my top students have personally used for swing trading. Number one, buying an earnings winner or a billionaire investor kind of play, where a billionaire has now just invested in this small penny stock, thus giving the penny stock massive credibility. I've seen these plays not necessarily spike all on day one, because billionaires, a lot of them just frankly aren't that famous, but they spike on day 2, day 3, day 5, day 7, day 10, when the mainstream press sometimes writes about it. I'll give you an example. Carl Icahn, he is actually a very famous billionaire, but he invested in this one ticker a few years ago, VLTC. And the stock was up roughly 100% from the ones to the twos on the news that this billionaire invested in this low price stock. I bought it in the twos after it was already up 100%. A lot of my students and doubters were like, why would you buy a stock up 100%? But I sold it, I think I sold some like later that day and some like the next day, and I made my 20, 30% as it kept going. 2 weeks later, that $2 stock was over 20, okay? 1,000% increase, because a lot of the press and a lot of the analysts that wrote about Carl Icahn and this company did not see it right away. Most of the press and most investors don't care about low price stocks. So you actually should employ swing trading on news that will take days or weeks to disseminate amongst all of Wall Street. And the same thing with earnings winners. When a company in whatever industry has better than expected earnings, or maybe the CEO says something positive about the future, it takes a little time for the analysts and the hedge funds, everyone, to write about it and make their moves. It takes time, and that's what swing trading is all about. It takes a little longer than everyone seeing breaking news in a day or in an hour or in a few minutes. One other pattern that I would use for swing trading is shorting pump and dumps. If a stock has gone up 500%, 1,000%, 2,000%, 5,000%, from let's say 10 cents to like $4, and it has the first red day, that's very important, where the volume is faded, the stock has maybe crashed, maybe they're not sending any more promotional emails. That oftentimes is a good place to hold your short for several days or several weeks if you can. My student Tim Lento, I know I have a lot of Tims, I'm sorry. We have Tim Bowen, Tim Rutani, Tim Sykes, and Tim Lento. Tim Lento is kind of the odd man out that most people don't know about, because he doesn't day trade a lot. He actually holds these pump and dumps short for several weeks, but he's made roughly $250,000 trading at Interactive Brokers. Sometimes they have borrows, sometimes they don't. But when he does short, he holds it for several weeks, and he makes 50, 60, 80, 90% sometimes on his shorts, because as a pump and dump collapses, it's not like the FBI always raids their offices all in one day. Sometimes it takes time for all of the insiders to start selling their shares off gradually. They don't want to crash the stock all in one day, so that would create like an SEC investigation. So the insiders and whoever paid the pumpers are selling their shares gradually. So sometimes these stocks take a week, 2 weeks, a month, 2 months, 6 months to really drop down. And yes, as a short seller, you are paying some fees. The longer you hold your short, you have to pay like like a per day fee, but it's negligible if you're using Interactive Brokers from what I hear. I don't have the patience, okay? I wanna be very clear with you. I make my 10, 20, 30% like on the Billionaire Play, or if I'm shorting a pump and dump, I'm in and out the next day. I'm always scared that the pumper's gonna repump, so there are risks with that, but it makes sense. If these pump and dumps are gonna collapse, if these pump and dumps are gonna go to zero, you theoretically could just hold for a lot longer, and I know Tim Lento does a fantastic job at that. So these are just two patterns. There are profit opportunities if you want to hold several days or several weeks. If you're like a full-time student or have a full-time job, you can still utilize the low price stock market to make money by having patience. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there, and also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.